This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Friday, June 26th, 2026, and we are staring down one of the most dangerous weekend holds in modern commodity history. The physical supply chain is breaking. Paper exchanges are desperately trying to change the rules, and sovereign nations are officially hoarding calories. If you are short physical atoms going into this weekend, you are playing with fire. Let's get you caught up for the global open. First up, the 60-second commodities flash. We have a silver margin hike shock. The exchanges are pulling the emergency brake. In a desperate bid to cool down the enterprise squeeze, the COMEX just announced a massive immediate hike to silver maintenance margins. Paper silver dipped briefly, but physical OTC silver is ignoring the hike entirely, aggressively testing the $78.50 to $80 threshold as industrial buyers refuse to let go of their delivery receipts. Meanwhile, the UN sounds the alarm on rice. Following this week's aggressive Asian rice export bans, the UN Food and Agriculture Organization has issued an emergency warning. Imminent food shortages are hitting import-dependent African and Middle Eastern nations. Wheat and rice futures are locked limit up. Look at Brent's Cape of Good Hope reroute. Brent crude is firmly established above $93 a barrel. Major tanker fleets have officially abandoned the Middle East corridors, rerouting around the Cape of Good Hope. This is sending global freight rates parabolic. Finally, we have a copper force majeure declared. LME copper just shattered the $14,800 per ton mark. The rolling civilian blackouts in South America have claimed a massive casualty. A Tier 1 mining conglomerate just declared force majeure on all copper concentrate shipments. Let us take a deep dive into why the commodity exchanges raising margin requirements will fail to stop the silver squeeze. Let's look at the Friday tape. The data hitting global terminals this Friday morning is proof that paper algorithms cannot solve physical deficits. We are watching the complete breakdown of just-in-time global supply chains. The entities buying silver right now are not leveraged day traders. They are multi-billion-dollar tech, hardware, and solar manufacturing titans. They do not care about margin calls. They care about securing the physical silver paste required to keep their assembly lines running next month. The margin hike simply forced industrial buyers to the over-the-counter market. We are now seeing a historic premium gap where physical delivery commands a massive markup over the ticker price. This brings us to the Great Maritime Reroute. The energy market is undergoing a geographical rewrite. When marine insurers refuse to cover holes moving through conflict zones, the oil must take the long way home. Rerouting around the Cape of Good Hope adds 10 to 14 days of transit time. This doesn't just delay the oil, it traps millions of barrels as floating inventory. This extended voyage also burns massive amounts of marine bunker fuel, further tightening the global energy balance. Brent at 93 is pricing in this logistical friction. It all culminates in the Friday risk-off reality check. Nobody wants to hold a short position over this weekend. Geopolitical risk is at an absolute maximum. The UN warning regarding the rice and wheat export bans confirms that the global food crisis is no longer localized. Paper shorts will be absolutely destroyed on Monday's open. Here is the trade flow take. We are closing out a week that will be studied in macro textbooks for a decade. The transition from financial engineering to physical reality is complete. Do not let the COMEX margin hikes shake you out of your hard asset positions. Maintain your aggressive physical long exposure in the silver and copper nexus. Stay liquid, stay sharp, have a highly defensive weekend, and we will see you on Monday.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.